A very happy day to all of you and welcome to the YouTube channel Banking Fundas. I'm your learning partner Sushila Hariharan. In this module, we're going to take a detailed look at the concept of payment banks, what they do, why were they set up in the first place, what are the restrictions that are imposed on payment banks, and of course, we'll end the video with our 3-question quizlet. Do remember to take the quizlet and check your knowledge. Okay, but first let's start off with what are payment banks. Payment banks, some of the names are already familiar to us, like Paytm, Geo Payments, Fino Payments, etc. In fact, even as we speak, a few of them are already listed on the stock markets and have been doing business of payments for almost 7 to 8 years. Paytm, for example, is such a large payment bank that it even sponsors the Indian cricket team and perhaps, if my memory serves me right, an IPL tournament as well. The payment banks in India were set up in 2014 with the primary objective to promote digital, paperless, and cashless banking. So we had to make a transition from crowded branches of banks, from extensive paperwork to a more seamless and digital method of banking. And hence, RBI thought that the best way to do this is to enable payment-only banks to come up in the country. The main objective of payment banks, the second point, is the non-banking financial organizations are granted the authority to offer basic bank services to every Indian citizen. This third point is financial inclusion. You know, for many decades, a large part of India suffered from two problems. One is underbanked areas, and second point was unbanked population. So according to World Bank report, India is home to 21% of the world's unbanked adults. This is a very high number. And since we are a developing country, we had to reduce this number and enable people from the lower economic strata to have greater access to banking, or else they will fall prey to the loan sharks, to the pawnbrokers, to the street side lenders, etc. So payment banks wanted to enable payments to be more seamless, paperless, and cashless. And therefore, payment banks aim to service the customers, especially migrant workers and those from the lower income households, and bring them into a formal financial system. So the main idea of having payment banks was twofold. One is greater financial inclusion, and the second was a higher level of technological adaptation of banking services. What do we mean by the concept of a differentiated banking license? RBI, the central bank of our country, which is also the banking regulator, grants two kinds of banking licenses. The first one is the universal banking license. Okay, what do I mean by universal bank license? Universal bank license is the license that is given to banks like Kotak Bank, Axis Bank, IndusInd, or even foreign banks like HSBC, Standard Chartered Bank, which explains the range of products and services that banks can do. So a universal bank license is a regular kind of a banking authority that is given to banks with respect to the range of activities that they do. The second one is a differentiated bank license. So there are some restrictions in what a payment bank can offer to its customers. Payment banks come under a differentiated bank license since it cannot offer all the services that a commercial bank offers, that a commercial bank gives to its customers. So this is the meaning of differentiated. So in our context of differentiated banking implies restricted banking. So if a commercial bank can do A to Z of banking, a restricted banking license permits payment banks to only do a few of those activities. So like small finance banks, which had a special reason and objective why they were formed. In fact, if you want to know more about small finance banks, you can check out the earlier video on small finance banks that has been uploaded recently, and the link of which has been shared in the comments box below. Similarly, payment banks also have a very specific purpose as to why they were formed. So let's take a look at some of these restrictions. The very first restriction is a payment bank can accept deposits, okay, but they cannot take loans. So over here, it's a very big cross, okay. This is the main nature of a bank, right? A bank's basic business is to take deposits and give loans. When they take deposits, banks have to pay interest. That is an expenditure for the bank. If they give loans, if they disburse loans, they will earn interest on that. All right. So payment banks are allowed to take deposits, but not give any loans. So this is a very unique feature of a payment bank. Let us see more of these restrictions. And then once we see all these restrictions, we'll be able to understand why these restrictions were there in the first place. Okay. The next one. Deposits that a payment bank can take. So now payment banks are allowed to take deposits. Let's take a look at what payment banks can offer by way of deposits. The first one is they can only take in nature of CASA accounts, current account and savings accounts, collectively called as CASA accounts. Okay, so these are the only two restrictions. These are the only two, not restrictions. These are the only two accounts that payment banks can accept by way of deposits. Payment banks cannot accept deposits that are in the nature of fixed accounts or recurring accounts. Now, this is very intuitive in nature. Okay, see, if you open CASA account, current account, or a savings account, only then you're given a checkbook and a debit card, right? So if you're given a checkbook and a debit card, only then you can use the bank's payment systems. If you're not given a checkbook or a debit card, then you cannot use the bank's payment systems, right? If you open only a fixed deposit, you cannot use the bank's payment systems. So therefore, payment banks cannot accept deposits that are in the nature of fixed deposits or recurring deposits. Sorry, that's gone and done a stamp somewhere else. I don't need any more stamps. Okay. The maximum deposit that a payment bank can accept was restricted to 1 lakh till about April 2021. And since April 2021, the amount has been increased to 2 lakhs. So the three restrictions that we can discuss already, the first one is the payment banks can accept deposits. Second one is they can open only deposits in the nature of CASA accounts. The third one is they can take deposits of sums not exceeding 2 lakh per account, 2 lakh INR. Okay. As already mentioned, these deposits must be in the nature of demand deposits. Can payment banks perform the lending function? The answer is a big no. Okay. Payment banks cannot lend because they are payment only banks. Okay. So they cannot lend irrespective of whether the borrower is a corporate borrower or an individual borrower. So what will banks do with all the deposits that they get? Very clear. RBI is very clear. 75% of the demand deposits is invested in secure government securities only in the form of statutory liquidity ratio. The remaining 25% is to be placed as time deposits with other scheduled commercial banks. So let's assume it's, ABC Payments Bank and they get 1 lakh rupees by way of deposits. 75,000 has to be invested in SLR securities, 25% as time deposits. What do we mean by time deposits? Fixed deposits. So these two are the big sources of income for the payment banks. The types of payments that are facilitated by payment banks is person-to-person payments, person-to-business payments, business-to-person payments, and they can issue debit cards. Okay, they can issue debit cards. They cannot issue credit cards. So let's look at what they cannot do. Payment banks receive a differentiated bank license from the RBI. They cannot lend. They cannot issue credit cards. They cannot accept fixed deposits. They cannot accept NRI deposits as well. They cannot issue loans. They, as of now, cannot set up subsidiaries to undertake non-banking financial activities. So payment banks are in the very restricted business of only payments. In order to facilitate this large technological infrastructure investment, payment banks have been advised to start their business with a minimum paid up capital of 100 crores. So many zeros are there, don't get confused. It's 100 crores, okay? It needs to have a minimum paid up capital of 100 crores. The minimum initial contribution of the promoter to the payment bank bank's paid up equity capital shall be 40% for the first five years from the commencement of business. And then thereafter, they can go ahead and do an IPO, like Fino Payments Bank has done, like Paytm Bank is presently doing, amongst others. So, okay. With that, we now move on to our Quizlet. Payment banks, the first question on the Quizlet. Okay, so if you know the answers, please write in the answers in the comment box below. I will give you 30 seconds. I will set up a timer. I'll give you 30 seconds to think about the answer, and then you can type in the answer. The first question, payment banks can start operations with, is it 500 crores, 100 crores, 10 crores, or is it D, no capital restrictions? If you're ready, your time starts now. Please type in your answers. I'll wait for 30 seconds while you'll think about what should be the paid up capital of a payment bank. It's very interesting to take these quizzes because I plan to have a month-end quiz called as a Maha Quiz, and the content of which will be to know that you know, okay? That's right. The answer is indeed B, 100 crores. Okay. The next question. What percentage of loans disbursed by payment banks should be to priority sector? Should it be 25%? Should it be 0%? Should it be 100%? Or can it be 75%? Think, your time starts now. Think carefully. Read the question properly. I like to give like these kind of googly questions, like how bowlers bowl googlies. I like to also give googly questions like this so that it makes you think. And when you think, your concepts, your understanding, your fundas get even better. What percentage of loans disbursed by payment banks should be to the priority sector? Please type in your answers in the comment box below. Absolutely right. The answer is indeed 0%, because payment banks are not in the lending business, right? So I kind of like to make you all think about all these questions and think about the concepts behind these questions. Very good. The last question, 3 questions. Quizlet, your time starts now. Payment banks can issue credit cards. Is that statement true or false? Please write it in your comments section below. This has already been discussed, whether they can issue credit cards, whether they can issue debit cards. They're payment banks only, right? They're not commercial banks. They're differentiated banking license. So if they can issue credit cards, is it true or is it false? You just need to say whether it's true or false. Absolutely, payment banks cannot lend. If they cannot lend, they cannot issue credit cards. Thank you so much for checking on in this video. Thank you also for participating in the Quizlet. More videos will be coming up on different concepts in banking so that your fundas on banking will be clear. If you like this content, do like, share, and subscribe. And for more, look out for the links below. Thank you so much. Have a great day ahead.